Welcome back to the channel. I hope you're all doing well and having a fantastic day. Today, we're diving into some significant developments in the cryptocurrency market. Over the past 24 hours, a series of impactful events have unfolded, triggering a wave of panic and uncertainty. This has shifted the overall market sentiment toward a more cautious and even negative outlook. Let's break down what's happening and explore how this could shape the market's direction in the coming weeks. The first thing we need to discuss is Bitcoin's price action. Earlier today, Bitcoin broke below a critical support level at $93,000 not once but twice. This has set off alarms across the market, signaling that the cryptocurrency's strength is weakening. At its lowest point during the day, Bitcoin fell to $91,400 before recovering briefly to $95,000. However, it didn't hold that ground for long and pulled back again, now consolidating around $93,300. The chances of a robust recovery in the immediate term are looking increasingly slim. This volatility is driving traders to adopt a more cautious approach. Many are choosing to step back, waiting for more predictable market conditions before jumping back in. Trading volumes have been fluctuating, reflecting the uncertainty and hesitancy in the market. One of the day's major headlines involves Tether USDT. The company increased its Bitcoin reserves by transferring $700 million worth of Bitcoin, equivalent to about 7,600 BTC. This is the largest reserve addition by Tether since March 2024. This move has slightly boosted market optimism, as it shows that Tether is taking proactive steps to maintain stability and confidence in its operations. Tether's actions are crucial for the market because USDT is a backbone of the crypto ecosystem. If USDT were to lose its $1 peg, the ripple effects would be catastrophic. Such an event could erode trust in stablecoins and destabilize the entire market. By reinforcing its reserves, Tether is working to ensure such a scenario doesn't unfold. Returning to Bitcoin's price action, falling below $93,000 has exposed it to significant downside risks. The next key support level is around $88,000. If Bitcoin fails to hold this level, we could see further declines, potentially dragging the price down to $76,000. The space between $88,000 and $93,000 is particularly fragile, with limited strong support to slow any downward movement. It's a critical moment for Bitcoin. The way the market reacts in the next 24 hours, and even in the run-up to the new year, could have a lasting impact on the year's start. If January begins with weakness, we might see bearish momentum continue for weeks, or even months, especially if there are broader economic or geopolitical uncertainties. Bitcoin isn't the only cryptocurrency feeling the heat. Dogecoin has also been experiencing significant volatility. Earlier today, Dogecoin fell below its 32-cent support level. This is a concerning development because, like Bitcoin, Dogecoin's next substantial support is much lower, around 26 cents. If Bitcoin continues to decline, Dogecoin is likely to follow suit. Adding to the intrigue, a massive transfer of 800 million Dogecoins was observed, moving from one unknown wallet to another. While such large transfers can sometimes signal something ominous, there's no immediate cause for alarm here. However, if these coins find their way to an exchange, it could indicate a potential sell-off, which would put additional downward pressure on the price. The behavior of traders provides valuable insights into market sentiment. Yesterday, we saw an increase in long positions as traders anticipated a rebound. While this briefly buoyed the market, many of these positions have since been liquidated, adding to the overall volatility. The long-to-short ratio among traders continues to shift, reflecting the market's indecisiveness. Beyond Bitcoin and Dogecoin, there are several other noteworthy developments in the crypto space. According to Bloomberg, BlackRock's spot Bitcoin ETF has become the fastest-growing exchange-traded fund in history. This speaks volumes about the growing interest and adoption of Bitcoin among institutional investors. MicroStrategy has added another 2K Bitcoin to its holdings. The company is doubling down on its belief in Bitcoin's long-term potential, even amid short-term volatility. A Hong Kong lawmaker has proposed adding Bitcoin to the country's national reserves, This bold move is seen as a step toward bolstering financial security and embracing digital assets on a national level. Banks are increasingly eyeing Tether's profits from stablecoin operations, leading to heightened scrutiny and regulatory pressures. While Tether hasn't conducted a formal audit since 2017, it continues to play a pivotal role in the market. Regulation remains a hot topic. Countries like the US, EU, Singapore, and Japan are adopting unique approaches to cryptocurrency oversight. Meanwhile, China's central bank continues to push for stricter global crypto regulations. Hong Kong has introduced a dual licensing system for virtual asset operators, signaling its intent to strike a balance between innovation and control. While coordinated global efforts to regulate crypto remain a distant goal, these individual initiatives are shaping the market landscape. In other news, a U.S. Treasury cybersecurity breach has made headlines. Reports suggest that China was behind the attack. Such incidents highlight the vulnerabilities of even the most critical institutions and underscore the importance of securing digital assets. If these cyber threats escalate, they could indirectly impact the crypto market by undermining trust in digital financial systems. As we approach the new year, the next few weeks will be critical for the cryptocurrency market. Bitcoin's ability to hold above key support levels will likely dictate the market's trajectory. Meanwhile, developments like Tether's reserve management, institutional adoption, and regulatory actions will continue to influence sentiment and prices. For traders, it's essential to exercise caution, especially with leveraged positions. The market's unpredictability makes it crucial to stay informed and prepared for sudden shifts. While this isn't financial advice, keeping a close eye on support and resistance levels can help guide your decisions. Thanks for watching. Don't forget to like, subscribe, and hit the bell icon for more updates on the crypto market. See you next time.